Welcome back to the research, the FinTech and Dream stage here. As you can see, I finally managed to get my red FinTech Week shoes on in the picture. I wonder if I can get it down again. The next session here is a very interesting session, I think, about the pandemic, sustainability, and regulation. And to lead that session, we have a special guest star, I would say, here at the FinTech and Dream stage is our very own Thomas, who will lead that panel, and he will introduce the rest of the panel. So welcome to you, Thomas, and take it from here.
Thank you, Simon. Nice look with the red shoes there. Hi, everyone. Oh, I'm just trying to get on the chair here. So yeah, as Simon said, we're going to talk a little bit about the pandemic, sustainability, and regulation here from 1 o'clock to about 1:45. I brought my phone with me, and it's not because I have to take a call in the middle of it, but it's actually so I can see if there's any questions. So feel free to ask questions in the chat, and then I'll see if I can ask some of them to the esteemed panel here. So if you could bring the panel up on screen, that would be great. Hi guys. I will actually start by asking you to introduce yourself. So I will start with you, Birgitte. Could you give a brief intro to yourself and what it is you're doing?
Yes, thank you very much, Thomas, and thank you very much for the opportunity to be in this interesting panel. My name is Birgitte Søgaard Holm. I work in Finance Denmark, which is the Danish industry organization covering a wide range of players in the financial sectors, being banks, mortgage credit institutes, asset managers, securities dealers, basically more or less everything else than insurance and pension. So good that is covered by Jakob. You can say my formal job title is I'm Executive Director of Investments, but not least I'm sort of the go-to person, the one organizing everything we are doing on sustainable finance, which covers everything: bank, mortgage credit, investment, asset management, etc. So it tends to, I would say, cover more and more, and it tends to grow every day. And for me as a person, I would say it tends to grow every day. So I'm learning every day, and looking forward to the discussion today.
Fantastic. Thank you very much, Birgitte. And I can see, as many other people, you're also working from home these days. Simon, you want to go next? Just a brief intro.
Sure. Thanks, Thomas, for the invitation. So I am responsible for running for the UN Secretary General a task force on fintech and the SDGs. It's something that's been running for about 18 months, has just launched its final report a couple of weeks ago. Prior to that, I ran an international commission also under the UN on financial markets and sustainability. Prior to that, ran a green and sustainable finance track through the Chinese G20 presidency and then the German and Argentinian presidency. So if you like, quite a long history of the interface between policy, sustainability and finance. Very pleased to be here.
Thank you so much. And it seems like you're calling in from the basement of a medieval castle or something like that.
Sounds good, doesn't it? It's not at all, but at least it looks that way.
Yeah. Okay, Jacob, you're up next.
Yeah, hi, I'm Jacob. I'm from Insurance and Pension Denmark. I'm a director of digitalization and development, and I work with a broad areas on digitalization, data economy, this transformation we're in. I have a background working with insurance and climate change adaptation, so this is really a topic close to my heart, and I'm really looking forward to the discussion today.
Awesome. So I want to start off with you, Simon. So because you, as you mentioned, you just released this report from the United Nations Task Force on Digital Financing, and I believe the report is called People's Money. It would be great if you could just give just a short intro to the report, why you have been working on it, some of the major findings, and then we'll take it from there.
Sure. So if we kind of start from the top end, most estimates suggest we need $5 to $7 trillion a year to finance the SDGs in the run-up to 2030. It doesn't really matter whether it's 4, 6, or 8. It's a lot of money. Clearly, there are challenges in aligning the way financial and capital markets, as well as public finance, delivers against that agenda. Many barriers to making that fit work. And so the Secretary General, understanding the fundamental disruption to the way finance works that digitalization is creating, framed the question, how can that disruption of the way finance works be harnessed more effectively to support a greater alignment of finance with the SDGs, and created this task force of 17 different people, ranging from the executive chair of the Ant Financial Group, now the Ant Group, through to various governors of central banks, fintech entrepreneurs across different continents, and a number of development practitioners. And that was the work they've done over 18 months. And as you say, the report was launched a couple of weeks ago in a sort of virtual New York space. In a sense, we've all been working on digital finance in the development space for now, a decade or more, but it has in the main been understood in the context principally of financial inclusion, banking the unbanked, and to some extent SME lending. And so really the challenge of the task force was to explore how digitalization enables one not to move beyond that, but if you like, to consider many other ways in which digitalization can accelerate that alignment of finance with SDG outcomes. And so it allowed us, or pushed us, to think more about what it means in capital markets, both debt and equity, what it means in the consumer spending side, what it means in the public financing side, as well as what it means, if you like, coming back to the individual citizen as taxpayer, consumer, pension policy holder, and so on. 18 months on, we put out our report as one of the activities that we've done, and I guess I would summarize it at a high level as follows. Firstly, we argue what's going to make a difference is not first and foremost the digitalization process itself, but whether or not digitalization empowers people in the allocation of their money. As I say, as spenders, consumers, taxpayers, voters, pension policy holders, and so on. Digitalization can have many negative effects on financing the SDGs, by accelerating short-termism, introducing bias algorithms, leading to greater illicit financial flows. The list is quite long of risks that need to be mitigated, but equally, digitalization can lead to more effective data flows that help to incorporate SDG analytics into both risk pricing as well as impact analysis. It can drive a new generation of financial products and business models that allow SDGs to become more integral into the way in which both public and private finance work. We've identified 5 what we would consider to be catalytic opportunities. These are multi-trillion-dollar opportunities at a global level, where we think digitalization can primarily make a difference, and we can come back to some of those in discussions. But then also cast our eye more at the governance and regulatory issues, and made a number of recommendations in that space. And I'll just highlight, we would take a view, you can still hear?
Yeah, we can hear you. We can hear you.
Sorry. We would take a view that amongst the many risks associated with digitalization, one is that the extremely positive network effects that digital allows to take place also leads to far higher levels of market concentration, which will lead and is already leading to a generation of what we might call big fintech. And those platforms, we might even call them companies, although that sounds a bit old-fashioned these days, will have huge cross-border effects that not only do what they say they will do, which is, for example, to reduce the costs of cross-border financial flows, which can advantage individuals, SMEs, and countries, but will also hollow out monetary policy of smaller developing countries, will impact their macroeconomic strategies and industrial policies. It's like a process of dollarization in many ways, creates new issues around where tax burdens lie and where taxes are paid. And so on the one hand, we like to think about fintech as being the original source of innovation, many new types of financial instruments and markets. And on the other hand, we have to simultaneously think about the way it leads to higher levels of market concentration and what that means for the role of international governing institutions, whether they be central banks, the G20, and indeed others. Finally, I would say, like most task forces at such a high level, in this case under the Secretary General, we have produced a fulsome report in many different shapes and forms and colors, different sizes and volumes, that is readable and I think offers both analytic insight, fairly clear conclusions, and I think some very practical recommendations in some of the spaces I've described. But simultaneously, we have launched or helped to launch a number of so-called Pathfinder initiatives that we think on the ground, as they are, really exemplify the kind of ambitious action that can be taken in harnessing digitalization, as I say, to finance the SDGs. And maybe in discussion, Thomas, we can come back and give one or two examples of that. I'll pause at that and pass it back if I may.
Thank you so much, Simon. I'm doing notes here, so that's excellent. I think I will actually move on because both the Birgitte that represents the Danish Bankers Association and Jakob from Insurance and Pension, I know both of you and both of your organization have worked intensively with this agenda also. So maybe I'll start out with you, Birgitte, so you get a high-level overview of some of the initiatives that you have launched and how you're working within this area of digital sustainability and tech.
Yeah, thanks for that. Well, actually, I would like to start by turning back time around 2-ish years in spring 2018. That was when the Commission issued their first action plan on sustainable finance. And I would say, to be honest, at that time, it wasn't really high on our agenda as an industry. But at that point, we sort of took the chance and decided that we wanted to be in the forefront of this agenda. And what we did was to establish, let's call it an advisory board. We called it a Forum for Sustainable Finance. And we basically gave them the mandate to give us as an industry recommendations, tell us what to do to contribute to accelerating the green transition. And we had a broad range of very knowledgeable persons ranging from NGOs, bankers, professors. We had Anders Eldrup as a chairman. He's known as Mr. Green in Denmark because he made the transformation of Dong to Ørsted. Perhaps some of you probably know this company. And we basically received 20 recommendations in December last year. And we have, so that sort of gave an agenda for us to work with. And just to give you a flavor of it, some of them was encouraging our members to sort of to work with the sustainable finance agenda in every aspect of the business. It tends perhaps to be then you have two strange persons in one corner working with this. But we are sort of trying to make sure that it's sort of integrated in the business models, encourage them to have more products, etc., etc. And then there was also a recommendation of measuring the carbon footprint, and measuring them and setting targets and publishing action plans on how to reach these targets. And I actually believe we are in the process of doing that right now. And as we went along, we actually we invited the Insurance and Pension Fund, so they are on board now as well. And I believe that will have a very strong impact on the behavior. Once you publish a target, it will definitely. You're committed to work with this target. So I believe that's sort of one of the main points we're doing. But then also just a few others. The EU agenda, of course, it's huge. We are extensively working, trying to be proactive on the EU agenda. And one of our, as you probably know, everyone, the taxonomy and everything is basically targeted toward the investments, asset managers. But what we are saying is that we believe that this should be extended to the credit side as well, meaning that the loan side for banks, that can be, give credits to small and medium-sized companies. We find it very important to have a broad transition, not to leave anyone behind. So one of our, main political positions is that that the taxonomy and all these regulations should be extended to the credit side as well. Then we are working, our members are working on the sort of leveraging on the good work that the UN is doing on principles of responsible banking and principles of responsible investments. Principles of responsible investments has a long history, I think maybe 10 years or so, but the principles on responsible banking was launched last year in New York, and some of our members were in the sort of the first wave of banks joining this. So that's, again, I'm sure that you, Simon, know this very well, but this is a sort of a framework, and you commit yourself to work in with all the SDGs, etc. So it's broader than the climate agenda. It works with the whole SDG framework. And then just the final, perhaps, comment is that on a national level, we have the government established these climate partnerships. So there is one on finance as well, and I have a very good collaboration with Jakob and his company, Insurance and Pension, to see how we as an industry as a whole can support this agenda. And there has been many, I would say, valuable cooperation partnerships in this process. So it will continue. So I think I'll stop for now. There are more details to everything, so please feel free to ask.
Thank you so much, Birgitte. And I'll actually hand it over to you, Jacob, because I think what is super interesting here is that even Denmark being a small country, your members represent some of the biggest asset managers, actually not only in Denmark or in Europe, but not only in Denmark or the Nordics, but actually in Europe. So whatever they are doing within this agenda, it actually has a massive impact. So could you tell us a little bit about how is the industry as such tackling this agenda, and what are you doing? What is actually being done by the different pension companies?
I'll do that. First of all, Simon, I'll just like to congratulate you on how far you came. As a young man, under the Kofi Annan period, I interned in New York. At that point, it was the Millennium Development Goals, and it's really nice to follow how well you succeeded with the Sustainable Development Goals. Earlier this morning, the chair of the Commission, Ursula von der Leyen, made her State of the Union speech. Besides COVID-19, she had two major points. One being climate change, the need for investments. The second one being digitalization. So the discussion we are having here today is really on the topic on what we need to, on the areas where we need to find new solutions. For the last decade, Insurance and Pension Denmark has been working really closely on climate change and investments. We started out with the climate change agenda, but within the last 5 years, really moved into the investment side, and today our members have around 20 billion US dollars invested in the green agenda, and we made a pledge last year to invest an additional $50 billion in green investments moving on towards 2013. So this is one of the most important agendas for the Danish insurance and pension sector. We had a board meeting last week, and we just decided to each and every year from now on, moving on to 2030, we are going to report on how we are progressing within our investment goals on the $50 billion US goal. So we're really going to try to follow this agenda really closely to see how we progress. And Simon, I think actually the Danish contribution to how to progress in this agenda is not a bottom-up solution, but actually a top-down solution. Because I think that, of course, as being a small nation in the world, our small contribution to this is the showcasing of how to make green investment profitable for investors worldwide. So this blend blended finance. We have a tradition of blended finance in Denmark, starting out in the 19s with windmill farms. And today those windmills investment there are no public support in these investments. So this whole case of showcasing how to move into difficult areas. Today, Ursula von der Leyen, she stressed the need to more investment, more research in hydrogen. If we really want to have investors moving into difficult areas like hydrogen, we need this kind of blended mixture between government and pension funds investments. And I think that's a big contribution from the Nordics, that we are actually able to show the positive business case. How can we make green investment be really profitable investment for worldwide investors? That's all for now.
Thanks, Jacob. And I think we actually lost Simon a bit there. It seems like his connection broke down. I'm sure he's running around trying to get a full bar on his Wi-Fi right now, down in the basement. But maybe while we are waiting for that, I would like to ask you a little bit. So maybe Birgitte, start with you. So how do you see the role of technology here? Because now we're talking around the green transition and what the industry is doing in general terms, around moving investments into more sustainable areas. But there is and we are a fintech conference, right? So it's how do you see technology play a role there in accelerating that agenda?
Yeah, thanks. I mean, I very much believe that technology is a sort of a basis or a necessary condition for accelerating this development. It's basically you can say a basis for a condition for I think it was mentioned before, to develop business cases, new products, etc. And I think I see the way that we should have like a seamless ecosystem from along the value chain, and I'm sure that the new technology can be helpful in this way, being artificial intelligence or whatever it is that I'm not very knowledgeable of. But perhaps it's worth mentioning that sort of before technology comes, I think data is sort of a precondition for talking about technology. And data is sort of the hot topic right now in Brussels and everywhere, I believe. So we were at least very happy to see the data strategy coming out from Brussels earlier this year, saying that data is not just for experts and nerds. It's basically the sort of the fuel. That's probably not the right word to use here. The electricity to make everything go around. So I think that sort of having establishing easy accessible databases, publicly available. Perhaps that's a discussion in Brussels. Should it be a public good, at least to a certain extent, in raw data? Then perhaps there can be companies on top of that, leveraging that. Could be a tech company, for instance, being able to structure the data or use the data in one way or the other. Of course, you need to strike a balance between consumer protection and all that. Perhaps we can touch upon that later as well. But just saying that, yes, technology indeed also in for a bank, for instance, is a condition for.
And I think Simon, you joined us again, right? It's a little bit hot in here. Simon, you joined us again, right?
Yeah, digital exclusion.
And we were just talking about the role of technology in accelerating the sustainable agenda. I think, and you alluded to that in your short intro, but you have some very concrete examples of digital financing and how digital financing is accelerating the sustainable agenda.
Yeah, sure. So let me give a couple of examples, and I'm sorry I missed Birgit, your comments, but I'll try to leverage off the data story because it's obviously central to the overall equation. So my first example is in Zimbabwe, and in many developing countries, perhaps the single biggest financing challenge is not what we may think, but is how to provide debt and equity to fast growth companies. One doesn't think of Zimbabwe as the place where that should happen. One thinks of California and Hangzhou, but actually it's as important in Zimbabwe as anywhere else. And so in Zimbabwe, the principal data payments platform, EcoCash, has launched the world's first stock exchange that is using payments data to do due diligence and credit ratings to allow equity and debt investment in high-risk, fast-growth companies. This has never been done anywhere in the world before, and is an innovation, I think, that will lead us in 10 years to make the comment, what we're doing in New York is what Zimbabwe did 10 years ago. Perhaps an unlikely statement, but I think you will see that coming. Just like we saw 20 years ago, the Johannesburg Stock Exchange as the first stock exchange in the world to do any SDG-related reporting. So I think that's an unexpected space in which one would expect innovation, which is in the heart of capital market development and in the high growth financing space, rather than how we would think about Zimbabwe and other developing countries as something to do with banking the unbanked completely, or at best, algorithmic lending of small side SMEs. And then the second example I wanted to give is out of Bangladesh. Now, we've all spent 50 years in the development space convincing ourselves that the way in which to fund long-term infrastructure in developing countries is to tap global capital markets. And actually, with few exceptions, that has been an abject failure, and has led to huge indebtedness problems, extreme financial and economic vulnerability of many developing countries, and frankly, not enough infrastructure. And so today in Bangladesh, there is an experiment being executed under the Office of the Prime Minister, initiated by the task force, which is trying to tease out whether in fact today we can move micro savings, so 20 cents at a time, into large-scale infrastructure investment. So in the case of Bangladesh, they need about $100 billion a year sustainable infrastructure investment to meet their SDG goals. Today, about half of that is being met through tapping international capital markets. Domestic savings has quintupled over the last 10 years. For those who are not English native speakers, that means times 5. And today, only 6% of domestic savings in Bangladesh actually flows into long-term financing. 6%. I mean, just think of what a waste that really constitutes. And so we're initiating a pilot combining public and private actors in Bangladesh that uses mobile devices in order to collect and aggregate small micro savings from, if you like, the Dhaka taxi driver, aggregate that into an investable pool using insurance products in order to de-risk the micro investor and ensure liquidity and low risk, and then use blockchain to flow funds into infrastructure investment that reduces the likelihood of, shall we call it, leakage, or perhaps outright corruption, by radically increasing transparency and trackability as one builds that bridge, school, or hospital. It both disintermediates some of the incumbents that have simply not proved as helpful as they should do. It encourages them to get back with the plan in bringing new innovations into capital markets in Bangladesh, which they have abjectly failed to do. And just to complete, Thomas, with a couple of numbers, the estimates are over a 10-year period, it reduces the cost of capital to Bangladesh in building a bridge by 20% in domestic currency terms. It leads to significantly reduced pressure on the credit rating of the country if the volumes are high, which could lead to further reductions in cost of capital across their external debt portfolio. It means that dividends are not being paid to JP Morgan, the World Bank, or the government of China, but are being paid to taxi drivers in Dhaka. And finally, it allows those taxi drivers in Dhaka to not simply save blindsided, but to decide, are we investing in that school that our children go to? Are we investing in that hospital that our parents go to? Or are we investing in that bridge that we have to go across 20 times a day as a taxi driver? So these, to me, are interesting examples, Thomas, because they're not one product innovation. It's not one new instrument or one new business. It's a whole ecosystem that is shifting the way in which we understand the financial sector intermediates between our money, remember it's our money, and long-term development. And not surprisingly, therefore, in conclusion, as you said at the beginning, the name of the task force report is people's money, because we think at the heart of this story, and I think the Bangladesh and Zimbabwe examples illustrate that, is how do we connect back the actual owners of capital, us, with the long-term financing needs that are going to make it work for us, our family, and our communities in the future. Thank you.
Thanks, Simon. That was just excellent examples of what is being done in some of the other regions, and like very excited about these solutions. I'm going to jump to Birgitte and then to you afterwards, Jacob, because I think this creates a nice bridge into a challenge that we just ran with you guys, Birgitte, around ESG screening. Would you mind telling a little bit about that, because that ties into the whole data issue that we talked about before?
Yeah, thanks. Yeah, as I said before, one of the in this process discussing in the industry, the transition of SMVs is sort of one separate and not that easy issue. So we decided to join forces with Thomas and his colleagues and also another partner, sort of an industry tech company, it's called, to make this challenge to see, okay, just a high-level challenge, ESG screening of SMVs. Let's see what's out there. So we ran that in spring. I guess it was meant for the original physical Copenhagen Fintech Week in May or something. So it ended up being completely virtual in May, June. But nevertheless, we had a range of, I would say, national and international fintechs going for this challenge. And we had, I don't know, 2 or 3 sessions sort of narrowing the candidates before we decided who was the winner. But it was, I would say, for me, that was really an eye-opener. It was very general ESG screening of SMVs, and we had, as I said, a very wide and interesting number of candidates, ranging from, the very good idea, just a very new company, crazy ideas, for more mature companies with having data or having made a sort of a platform showing data, making this, as I said, sort of an example of the seamless value chain between what would be I would say a good goal is that the one company, how it works with the climate. There's SDG goals. It has a way of doing it. It would be very nice if it's the same way that the bank views at this issue. So if we sort of could end up with the same infrastructure, the same way of viewing things, I think it would sort of remove a barrier to financing of these companies and sort of facilitate the transformation of these companies. So you can say now it was a way, being an industry organization, it was a way to, I had, of course, individual members of our organization joining this challenge. And it's now, I would say, up to them to sort of have bilateral talks, and we'll see if there will be a perfect match. But it's a way, being an industry organization, I would say I was very positive, and I think it was a very good way of sort of facilitating the partnerships between individual banks and the fintech community.
Thanks, Birgitte.
So, yeah.
And then moving on to you, Jacob, and maybe you want to comment a bit there. I think there are several things here that would be interesting to get your take on. There's something around technology and how that is moving the asset management industry, your members, the pension companies. There's collaboration between some of the smaller and more agile fintech startups and the more established companies. And maybe also a few comments on some of the examples from Simon that I really like, because it's very much about empowering the individual and creating that very clear and visible link on the investment side. So yeah, that was maybe a 3-in-1, but over to you.
First, I want to start out with the report from Simon and UNDP, people's money, because it's a good starting point. And I think people, enterprises, industries, societies, we need concrete goals. If we really have to make a difficult journey, as this climate change journey is, so we need those kind of moonshots. Danish government set a target of 70% footprint, carbon footprint reduction. The European Commission just raised their moonshot today to 55%. So first of all, I think it's really important for us to have these kind of moonshots to work. So we really have a common agenda, a common journey that we are on, a common goal, and a common way to get there. And there, the data economy is really important. I think within the next 5 years, we're going to have a completely different, how to put it, a market for data on not only on the European level, but also on the global level. And those 5 years is really important to make sure that we use data in the right way, that we protect the individual, that we give people a actionable choice on how we do investments, creating green products. And I think the whole forest of creating this data economy is going to be one of the most important challenges within the next 5 years. We need a clear framework to create, for example, giving partnerships, data partnerships between the financial sector and all sectors, being it the building sector, agricultural sector, data from Europe, sharing with data from, for example, getting Africa, Bangladesh, other kind of areas. It's going to be a really difficult task to do this, and the overall goal is to understand risk. Data is one of the most important drivers to really understand the risk you have as an investor. And if we are able to create fruitful data partnerships between our industry and all the industry in the country surrounding us, I think we have found some of the solutions to get investments in more difficult areas. And one of the really concrete and nice but small example that Simon mentioned. So if we really want to move this up on a large scale, we really need to understand risk better, and data is a driver for understanding risk.
Thanks, Jacob. And maybe a little comment from you also on the collaboration between the fintech startups, because I think we've come a long way in your industry from say 4 or 5 years ago until where we are now. We just had a pension company investing actually in a smaller startup that made pensions available for freelancers and the likes. So could you comment a little bit of how do you see that development also?
Well, I think the whole fintech startup community has been a really important driver in the whole agenda. For example, take some of the startups concretely in Denmark who has been pushing on the green agenda. It's been also a positive wake-up call for the established industry. There's the drive for having more green products, green investment products. All those kind of products are easily to find now in the market. It wasn't 5 years ago. So I really think the fintech industry really gave a positive push to the established industry, that agenda. And of course, we have in Denmark, as we do have these collective pension systems, we also have some small challenges, as you just mentioned. Of course, we have a lot of short-term contract employees we have to find solution for, and we have a example giving, I think you are hinting to Grandhood, who made a really nice fintech startup on how to create other kind of possibilities for example giving short contract workers that we also see developing in Denmark. So it's been there's a nice cooperation and a nice push on the industry, and we also see a development where a lot of the startup within the investment industry or pension industry are actually changing targets. So originally they had a great idea to disrupt the pension or investment sector, and now they're really high value specialists on green investments, on ESG targets and all those kind of issues. So you have a natural movement where you have dynamic young people wanting to change the world, and now they are highly valued specialists within the value chain.
Great. I'll actually jump to a question here from one in the audience here, from Kara, and that's for you, Simon. So Kara is writing here, my question is for Simon in relation to the people's money and enabling local people like taxi drivers in Bangladesh to make investments instead of companies like JP Morgan. Would these taxi drivers be able to have any underlying shareholder rights in the same way as a firm like JP Morgan would be able to vote, for instance, at the annual general assemblies and stuff like that?
Well,
that's a very concrete question, but
yeah. Well, part of the answer is, when JP Morgan starts to take real equity risk in infrastructure in Bangladesh, send me a note, because I haven't noticed that happening so far. So there's absolutely no prospect of JP Morgan ever doing anything like that. They will lend money on sovereign rates to the Bangladesh government, and they will ensure that the World Bank and others bring pressure on the bank on Bangladesh to pay their debts on time. So let's be realistic about this. This is not an equity question. This is principally a debt question in the case of Bangladesh. I think that's the first part. The second part of the answer is, we all talk about the circular economy, but what does it mean in finance? What does it mean in finance? It means that people who save should be able to choose how that money is used. Now, if you look at the European context, there is a law on the statute books out of Brussels that if you're a pension policy holder, a pension fund has to interact with you in describing or discussing how that money is going to be used. And I think, with the greatest respect, that has been completely unused in any effective way at all so far. So it's on the statute books, but nobody really knows what to do with it. It's a classic sort of European let's chat. Actually, the Bangladesh story takes it to another level, even without the pension fund in the middle. It says, actually, you can choose where your specific money goes. So this is not the world of investo robos, although that may also make a difference, but it begins to allow not so much a shareholder vote, but a saver's choice. A saver's choice as to where that money actually flows. And that, in many respects, is far more powerful than sitting in an annual meeting where you hold a fractional share of 1% of some large company that won't listen to you in any case. So I think if the underlying question of the person is, does it empower people to make real choice over how their money is used? Does it empower them to hold large institutions that use their money more to account? The answer is yes on both fronts. But, and I just want to stress the point that I made at the beginning, this is not an inherent characteristic of digitalization. There are probably $1 trillion plus more of money that flows illicitly across borders annually, and digitalization could help to increase that number significantly or reduce it. What we do with digitalization is a choice. If it's going to empower people, that will be a policy choice, a societal choice, not an inherent feature of digitalization itself. And unless we get our heads around what that means from a governance point of view, we'll be bluffed into thinking that market innovation and technology drivers will make the changes alone that we're trying to establish, which they won't.
Thanks. So we are about to run out of time, but actually I want to go a little bit. I want to go back to you, Simon, because I want to maybe, if you had one wish, now you have all the Danish pension and insurance companies in the room, at least in the virtual room. You have all the Danish banks. So if you would have one ask for these guys, what would it be? And then I would turn it over to you, Birgitte and Jacob, just to get your very brief take on Simon's ask.
Sure. So I think there are two pieces to the story, not one, and I'll keep it very short because I know we're tight on time. So the first is, as Jakob said, we see more and more data being used for, let's call it ESG screening. But actually the numbers are not good. Yeah, it's $30 trillion if you're looking positively at the numbers out of a total capital market capitalization of $185 trillion. We're still fractionally engaging in capital markets today. So first of all, let's not cheat the system and tell everybody that everything's okay. Let's really focus on how to access those capital markets at scale, much of which doesn't sit in Europe, yeah, but sits elsewhere. You know, that's where the real numbers are growing. So the first thing is, let's get really more deeply into capital market penetration, which is certainly one of the 5 catalytic opportunities that I've identified. And the second piece is experiment. You know, it is sadly true that many banks in the system are part of the problem, not part of the solution, that they're actively lobbying against fintech intrusion, that they're actively trying to retain savings in the models that have proved profitable and low risk over time, that they're pushing away algorithmic lending because they prefer to get subsidies from governments in order to add, you know, to do SME funding. You know, that we need to get banks either in the game, being innovative and really opening up new ways to channel finance, or frankly, off the seat and out of the market. Yeah, and that's the same with every sector. There are always incumbents, and some of them rise to the occasion and prove to be powerful change agents, and some of them don't and need to be ultimately moved out of the way. We need the banking community to become part of the solution much more quickly now, obviously in Copenhagen and Denmark, but also elsewhere. Thank you.
Thanks. And then for a quick comment from you, Birgitte, and afterwards, Jacob.
Well, very brief, I would say that I hope and believe that at least that's the way we see ourselves, that we are definitely ready to be part of the solution. And we have in Denmark at least concrete, more than one. We have several examples of very valuable partnerships between Danish banks and fintechs, ranging from mortgage credit to mobile pay to investment platforms, etc. So I'm quite confident that we will succeed in this as well. That's at least what we have. That's the ambition from an industry point of view. And then perhaps a short point of on the regulatory side, I would say that it's very important to have a level playing field, because I believe that would support the fintechs as well. So having a level playing field also, say, the banking industry towards big tech, for instance, in terms of data, etc. But that could be an issue for a new panel, I believe.
Probably. Thanks, Birgitte. Over to you, Jacob.
Well, first of all, I agree with you, Simon. There's still a long way to go. I just want to emphasize that, for example, given in concretely Denmark, most of the pensions funds are owned by members. So this investment, $50 billion, the US dollars investment in climate investment, is actually a push from members. You know, year-long push. You know, we have to be on the green agenda. Now we are there. We're trying to, you know, really do our thing. I'm not saying we're perfect, but at least this movement is actually a people's movement, pushing the industry because they own the industry, at least here in Denmark. And getting back to where I started, I really think of this kind of blended finance thinking is what we need to get more investments in the examples you mentioned, with Bangladesh and etc. We need cooperation between the industry and government. And actually, we have a long list of examples of the Danish insurance and pension sector investing in sub-Saharan Africa. So it's possible, but we need blended finance.
Thank you. I think we're out of time here, and I think we also managed to pick up on at least one question here from the audience. Thank you so much for joining this panel. Simon, thank you for taking your time out. Birgitte and Jacob, it was very valuable. So yeah, again, very pleased with this and hope to speak soon. Thank you.
Yeah.
Thank you.
Thank you. Yeah.